Hello everyone, this is Plums series which is Prelims Level Up MCQ series. Here we discuss 5 MCQs daily and this will help you in your UPSC preparation. Today is episode number 214 and I am dealing with economics MCQ. Before starting this class, I would like you to please subscribe the channel and also like and comment on videos. These contents are free of cost, so for test series and foundation video, you can contact to Vysh sir on WhatsApp 7200 681 675. So let's begin. Today's MCQ number 1 is consider the following statements. World Trade Organization determines developed and developing countries based on its per capita GDP ratio. Statement 2. WTO provides assistance to developing, least developed, and low income countries in transition to adjust to WTO rules through technical cooperation and training. So, here you have to identify the correct statement. So, the options are 1 only, 2 only, both 1 and 2, neither 1 nor 2. So, I will provide you 10 seconds. Try to answer this question. So, its correct answer will be option number B, which means only statement 2 is the correct one. Now, let's look at the explanation. WTO has not defined developed and developing countries, and therefore member countries are free to announce whether they are developed and or developing. That is the statement number 1. That's why the statement number 1 is the incorrect statement. It is WTO's duty to review and propagate the national trade policies and to ensure the coherence and transparency of trade policies through surveillance in global economic policy making. Another priority of WTO is the assistance of developing, least developed, and low income countries in transition to adjust to WTO rules and discipline through technical cooperation and training, which is the statement number 2. That's why the statement number 2 is the correct one. MCQ number 2. Which of the following taxes or levies is or are applicable on petrol or diesel in India? Excise duty, goods and services tax, value added tax, agriculture, infrastructure and development cess. So you have to select the correct answer code, that is 13, 134, 234 and 1234. I will provide you 10 seconds. Try to answer this question. Basically these questions are framed from your current affairs. So try to answer this question. I will provide you 10 seconds. So its correct answer will be option number B, that is 1, 3 and 4, which means excise duty, value added tax and agriculture, infrastructure and development cess. So excise duty and VATs, or we can also say it as a sales tax on fuel, constitute an important sources of revenue for both the center and the state. The center also levies additional cesses on petroleum product. That's why only 1, 3 and 4 are the correct one. MCQ number 3. Which of the following department administers the working of Patents Act 1970, Designs Act 2000 and Trademarks Act 1999? Option A, Department of Commerce. Option B, Department of Scientific and Industrial Research. Option C, Department for Promotion of Industry and Internal Trade. And last option is Department of Patents and Design. So I will provide you 10 seconds. Try to answer this question. So its correct answer will be option number C, that is Department for Promotion of Industry and Internal Trade. The explanation is the Office of the Controller General of Patents, Design and Trademarks is under Department of Promotion of Industry and Internal Trade, which is under Ministry of Commerce. The Controller General supervises the working of Patents Act 1970 as amended, the Designs Act 2000 and the Trademarks Act 1999, and also renders advice to government on matters relating to this subject. That's why the state option number C is the correct option. MCQ number 4. Consider the following statement regarding interest coverage ratio. Statement 1. The interest coverage ratio is a debt and profitable ratio used to determine how easily a company can pay interest on its outstanding debt. Statement 2. For calculating interest coverage ratio, a company's earning before interest and tax is considered. Statement 3. Generally, a lower value of interest coverage ratio shows greater ability of a company to meet its interest obligations from earnings. So, you have to identify the correct statement regarding interest coverage ratio. Options are 1 and 2, 2 and 3, 1, 3, and 1, 2, and 3. I will provide you 10 seconds. Try to answer this question. So, its correct answer will be option number A, which means only statement 1 and 2 are the correct statement regarding interest coverage ratio. Now, let's look at the explanation. The interest coverage ratio is a debt and profitability ratio used to determine how easily a company can pay interest on its outstanding debt. The interest coverage ratio is calculated by dividing a company's earning before interest and taxes by its interest expenses during a given period. Generally, a high coverage ratio is better. So, this is the question and answer is 1 and 2. The last MCQ of today's class. What is gross investment in an economy? A total investment made to the fixed assets of an economy for a given year. Statement B. The total investment by the government in infrastructure for a given year. Statement C. The total investment made to the capital stock of the company for a given year. And the last statement is the total investment made in the stock market of the company for a given year. So you have to identify the correct statement regarding the gross investment. So I will provide you 10 seconds. Try to answer this question. So its correct answer will be option number C, that is the gross investment is nothing but the total investment made to the capital stock of economy for a given year. And here is also the explanation that the gross investment is the total addition made to the capital stock of an economy in a given period. Capital stock consists of fixed asset and unsold stocks. So investment in fixed assets is a component of gross investment. So gross investment is the expenditure on purchase of fixed assets and unsold stocks during the accounting year. So that's all for today's class. Next episode will be tomorrow. So please subscribe and stay tuned.